Today I'm sharing what is probably the most valuable video that I ever made. And that is because I am finally breaking down the exact structure that took me from years of failure to becoming profitable trader. And I'm not going to gatekeep anything, so I'm gonna walk you through the whole process step by step. And this is the same strategy that is known for producing the crazy monthly returns when used right, so make sure to stick till the end and take notes. Because if you truly understand what I'm about to teach you, this could genuinely change everything for you. And with all of that being said, let's jump straight into it. And before we start with the actual strategy, I just want to show you some kind of proof that this model actually works. So this right here are my results over a random month, so you can see everything is right there. Also, I like to also refresh the page so just you can see that all of this is 100% confirmed and I have nothing to hide from you. So you can see all the wins, all the losses, and now I think we are good to actually go into what the strategy is. So the first thing that we are going to cover is the candlestick formation. Now this seems really simple and really stupid in some kind of way, but this is really important because this is actually core of the whole strategy and this is the core of trading. So if you truly understand why and how the candlesticks form this way that they do, you're gonna understand how the markets move. So let's first learn what the body and what the wicks mean. So right here, when we have a bullish candle, as you can see right here, we have a open at the bottom, then the wick was the lowest that this candle has been, and then we have this upper wick right here, which is the second wick, that is of course the highest it has been, and then we have the closure, which is just a close where the candle actually closed. So this is really simple. It's the same thing on the bearish candle. So we just opened at the bottom. This was the highest we have been right here this week. Then this week down here was the lowest we have been, and then we have the closure of the candle, which is the bottom of the body. So all really simple. But what does this truly mean to us? Within this week, there is actually three phases happening. So one is called accumulation, another manipulation, and then we have the distribution. So we are gonna learn how to spot these phases within a candle. So first one is accumulation. That is just the phase where market is kind of ranging and generating liquidity. What is liquidity? It is just kind of generating people to enter the market. So it is going up and down and kind of just inducing everybody to either buy or to sell the market. And what is that gonna do? That is just gonna make high and low of the accumulation have loads of liquidity. We know that liquidity likes to get manipulated and swept, so followed by this accumulation we are gonna get first of all manipulation. So that manipulation is gonna manipulate one side of the accumulation because we know that both sides have loads of liquidity. Then we are gonna manipulate first one side, and then followed by that manipulation, which we know is going to happen. Then we will receive finally from the manipulation, we will start distributing, which will be just a distribution, and that will just mean to go on to take another side in the market. So if we swept the low of the accumulation, then the distribution will go on and sweep the high. So we collect all the liquidity from the market, and believe it or not, all of this happens in a single candle. So you can see right here, this is the reference from the candle that we have, and you can see when the market opens right here, we basically just kind of accumulate in the market, and then when we accumulate enough, of course creating a body, we actually generate the wick to the downside, which that wick basically represents the manipulation phase. You can see the manipulation phase right here, and then after we get that manipulation towards the downside, of course sweeping everybody out of the accumulation phase, what we are finally gonna get is that distribution towards the upside. You can see it's starting after the manipulation to of course then target all of these highs in the market right here, and then we are just going to close somewhere after that, which basically is not important. What's important is that after the accumulation we had that manipulation, swept all the stop losses out, and then followed by that we got that distribution towards the upside where we targeted the rest of the stop losses. So right here this may look complicated, but if I draw on the chart you can see that this right here is a really clean accumulation in the market, and then what followed by that is a manipulation to the upside. So you can see how we manipulated all of the stop losses to the upside right here, and then followed by that we had a huge distribution to the downside targeting all of these stop losses. So we have accumulation phase right here, then followed by that we have a manipulation right here, and then the distribution towards the downside. It's really simple. So how are we gonna pair fair value gaps with the manipulation? So the fair value gap is a 3 candle formation with a hole in between. I think all of you already know this, so I'm not gonna go into too much details. It's really simple. But right now, if we look on the chart, what do we see? We see that when market basically goes through the accumulation phase, which is this one right here, what we basically do is when we manipulate, we also a lot of the times get that nice delivery. And what the delivery is, we get the retest of the fair value gap. So you see when the manipulation happened right here, so this right here was the accumulation, then followed by that we had a manipulation to the downside that also retested a fair value gap right here, so this one, and then followed by that we had a final distribution towards the upside. Then of course, after these 3 phases, we are expecting it again in the market for accumulation to happen right here. Then of course, when we create enough highs and lows in the market, we want to see a manipulation to the downside, of course really likely to enter the fair value gap, which is going to give us more confidence, and then after that we want to see a distribution. So these 3 phases are always going to repeat itself in the market. So you can basically see the same thing right here. So we had a distribution right here that of course followed by the end of the previous 3 phases. Then after we got that distribution, we started accumulating again. So right here we accumulated a lot of highs, a lot of lows. So basically this right here is the accumulation phase. Followed by that, what we had is a sweep to the upside, which is basically this right here, where we got the manipulation towards the upside. We entered a fair value gap, which counts as a delivery, as we already learned about. And then after that, after we basically had a manipulation to the upside, what then followed is a target of the other side of the accumulation, which is basically this distribution right here. So we basically had accumulation right here, then we had a manipulation towards the upside, and then when we had that manipulation, we entered this fair value gap. We also got an entry right here that we will touch up on, and we targeted the rest of this accumulation. Also, how we are gonna read sweeps versus continuations on the higher time frame. So all of the times when we actually get a sweep, and what I mean by sweep is the manipulation of some kind of low or some kind of high in the market or some kind of accumulation phase on the higher time frame, what we are going to see is we are going to see a candle like this, that the majority of it's a wick, and it basically just kind of swept and then returned really quickly to the upside. But then when we are not getting the manipulation, but we are getting the distribution and basically just continuing that direction, we are going to get a strong body to the upside. So there is not going to be any wicks and rejections. There is going to be one clean strong move to that direction and the closure, which is just going to let us know that the market is going to continue that direction. So the entry model, after we get basically this manipulation of the accumulation phase, after we get the delivery from the fair value gap, we are going to want to wait for the last fair value gap that got created in the market to get disrespected. And of course, if we want to enter to the upside, we need to disrespect the bearish fair value gap that basically happened to the downside. And if we manipulate it to the upside, we want to inverse and disrespect the bullish fair value gap towards the downside to enter short positions. So this is going to make a lot more sense on the chart. So basically, we need to disrespect the fair value gap towards the upside to enter longs, and we need to disrespect a fair value gap towards the downside to enter short positions. So how does that actually look? So for example, right here you can see when we manipulated towards the downside, we entered this fair value gap right here, and then followed by that, of course, we rejected quite hard. We left this fair value gap right here in the market. What we did, we disrespected it towards the upside. That was our entry, so we entered on the closure right here, stop loss below, and we targeted to the upside. So this basically right here was the resting liquidity, and this was the distribution phase towards the upside when we targeted. So entry is going to be on the disrespect of the last fair value gap after we get that manipulation. Okay, so here we are at the market right now. So the first thing when we hop on the chart is we start to kind of look for that accumulation phase. And of course, what do we see right here? We basically see that we have some kind of a trend line going towards the upside, and then also right here the same thing. So the market is not wanting to kind of break out of this level. So for example, how we want to now tackle the market, we want to either see a sweep to the upside followed by an entry to the downside, so something like this, or we want to see a, of course, break to the downside, then followed by a entry towards the upside to target the rest of the liquidity. So basically, whatever we do, wherever we manipulate to the upside or to the downside, all we are doing is we are going to target the other side of the market. So let's see what the market is going to do. Is it going to spike in some direction? So for example, right now, a little candlestick to the downside. Let's see what is going to happen. Okay, so basically, if we take the market from this low, let's see if it's actually going to manipulate all of this accumulation. And yes, it actually did. So right now what we want to do is we can also search for that fair value gap that we talked about. If I open the 15-minute time frame, and if you look to the left, we can see that right here we do have a fair value gap. So basically we have a respect of the fair value gap, which is also going to push the market to the upside. So right now what we do is when we have a delivery, we have a manipulation. For the entry, we just need to check out what the few more time frames are doing. So right now we are on the 1-minute time frame, and we have a fair value gap right here, and then we have a fair value gap right here. So we have two fair value gaps. So what are we going to do? We are also going to check out the 2-minute time frame, and we have a nice singular fair value gap there. And on the 3-minute time frame, we do not have any fair value gaps. So it's going to be much nicer to wait for the clean 2-minute time frame to get disrespected and then to get an entry to the upside. So let's see if that is potentially going to happen. So if I fast forward the market, there it is. So right now we disrespected this fair value gap right here. So what we can do is we can enter on the closure right here. We can put our stop loss below the body or below the fair value gap right there. And what we can do is we can target liquidity to the upside. So this right here is a clean low right here, and that is basically it. So all we do right now is we wait for the market. Of course, one more thing is you can target maybe fixed risk to reward, so maybe 1 to 2, 1 to 3 to the upside. So it is completely up to you. But what you need to go is you need to go with flow of the distribution and the manipulation. So you see how the market went really nicely there and hit almost 1 to 3 risk to reward. So basically whatever you targeted, it would work out for you. Okay, so that is basically it. I hope that you liked the video. If you did, make sure to subscribe to the channel, to like this video, and of course comment any questions you have. And also one thing, at the moment I also have few one-on-one mentorship spots. So if you think that will be something for you, make sure to check out the link in the description, see if there is still some spots left, and book a call where I basically see if you are a right fit for it. And basically with all of that being said, I hope you enjoyed the video, and I'm gonna see you in the next one. Peace.